Welcome back. I'm Joe Elkier here with Damian White. This is the Gold Spot. Damian, that 70s show is kind of starting to be a theme here. We're seeing lots of similarities between now and the 70s. The big difference is our debt. We're looking at debt. I see speculation that our debt could be $40 trillion by 2025, even higher at the rate we're going, $750 billion a month right now. So that's getting out of control. We're seeing China dumping treasuries at all-time rates, largely in part because of the rates we're seeing on the bond market. Can you give us a little insight into that?
Yeah, absolutely. I mean, I think one of the biggest things that people need to understand is that bonds are inversely proportional. So your asset, if the rates go up, the value of the asset is going down. And so that's really what's going on right now is the rates are going up at a terminal velocity right now. We haven't seen this kind of an increase in a really dramatic fashion. And it's causing disruptions all around the world in all financial markets. But certainly some of our biggest bondholders are feeling the pressure from that. Even our own banks, I mean, Bank of America came out and they had $131 billion in unrealized losses on their earnings report. Now, if they hold those bonds forever or for 10 years or however long, they'll get their money back. But as of now, the value has dropped significantly. So it's causing reverberations throughout the financial world. And, I don't know what the end game is at this rate. And we are seeing just incredible amounts of debt accumulating on the U.S. balance sheet. I mean, we passed $33 trillion, which was a hallmark, like huge level. And 2 weeks later, we were at $33.5 trillion. So we obviously cannot keep that pace. You're right. I mean, at one point, we were tracking on $1 trillion a month. I mean, that's absurd. And I don't know where this is going. I mean, I think the House is kind of frozen in war spending. And so there kind of seems to be a disconnect as where this money is going or how it's expanding so rapidly. But it is causing big problems. And I will say one thing, it cannot stay at this level. It cannot do it. Something is going to break, and that's what always happens is the bond market breaks something, which is what the Fed has induced by raising rates and raising them at such an unprecedented pace. So, you're seeing it through banks, governments, countries, corporations, and personal balance sheets. I mean, credit cards and car loans and mortgages, and the system cannot handle this. It will snap at some point.
I saw an article yesterday talking about mortgages are 52% more expensive than renting a home. So with these rate hikes and inflation constantly, I hear talk about inflation being, they're going to try to inflate us out of debt. What does that mean?
Well, I mean, it does exactly what it says they're doing is they're inflating it, keeping the rates going up, brings the value of the bonds down. If the Fed starts buying those bonds back at pennies on the dollar, effectively they're removing that debt out of the system. So we'll see how that happens. But I will like to say one thing, and you've noticed it in the gold market over the last, say, 3 or 4 weeks, where interest rates started getting to this terminal move they were having, and it caused gold to drop a pretty significant amount, $100, $125 at least. And then the oddity happened is gold reversed and it skyrocketed. I mean, almost 100 and like close to $150 in a very short period of time, a week and a half maybe. And what we're seeing with that, in my opinion, is a decoupling of the bond market and gold. And gold usually will go down if rates go up. If gold stays the same and starts going up in the face of bonds, this is what reminiscent of the 70s. You couldn't keep it down. I mean, rates in the 70s went from 7 or 8% up to almost 20%. Meanwhile, gold went from probably $50 an ounce to $800 an ounce. We're starting to see ruminations of that happening again. And when that does, hold on, because gold could do something that people haven't seen in 50 years.
I hear once we hit that 2100 mark, 3000 is going to come very quickly. So one of the old sayings, you buy gold and wait, you don't wait to buy gold. Go to our website, request information. We're here to help you out. Give us a call. We'll see you next week on the Gold Spot.